Okay, the second of the two stocks we got to look at today, it's going to be Activision Blizzard. And we got to talk about Activision Blizzard because, well, it's been a hot stock lately. Video gaming taken off like no one's business lately. So, let's take a look at these earnings and see why the it's down slightly after hours. It rose originally and now it's slightly down. Let's divulge. So, overall, non-GAAP EPS of 97 cents beats by 28 cents, and GAAP EPS of 75 cents beat by 16 cents. So that's what I would call a quality beat. Quality beat. I like to see that. I feel like I was going to say something weird there, and then I didn't. So thankfully I didn't. But good numbers there. From a revenue perspective, 71.9% year-over-year growth. Beats by $380 million. They posted a $2.08 billion number. Holy crapoli! I mean, holy crapoli! I mean, what do you want me to say there? 72% growth year over year. That's what I call huge numbers. Quarter two monthly active users were 428 million. Total. Activision saw 125 million, Blizzard saw 32 million, King Digital saw 271 million versus quarter one, which saw 407 million active. So a lot more users in Activision. Blizzard stayed the same, and King Digital saw a slight decline. So nothing to worry about there. As far as the more detail that they give us, engagement hit a record, and bookings grew nearly 72% and blew away estimates. Love that. Operating cash flow was $768 million. Among detail highlights, Call of Duty in-game net bookings more than doubled in the last quarter. People are playing Call of Duty Warzone, baby. It came to nearly 5 times last year's quarterly total. COD Mobile saw strong sequential growth in engagement and player investment. It's expecting that even as pandemic tailwinds moderate, it can build on a new higher base in the second half of the year. We expect to launch major new content and key franchises and with meaningfully larger audiences than we have seen previously, creating the opportunity for strong financial performance. It is giving guidance. This company's giving guidance. Can you believe it? For quarter three, it's guiding bookings of $1.65 billion above the consensus of $1.4. Incredible. And for the full year, it sees 6.7 or 6.625 versus a consensus of 7.2. Beats consensus on guidance, beats on the top and bottom line, and the stock's down. That's pretty wild. So we'll look into obviously a little bit of this detail here, just to get an additional idea as far as that's concerned. So let's see what else we can talk about as far as business highlights. Obviously, they talk about Activision. Call of Duty Warzone has reached over 75 million players to date. In the first quarter since Warzone launched, hours played on Modern Warfare universe increased 8-fold year over year. That's right, driven by both existing and new players. People are playing Warzone. They're tired of Fortnite, so they're playing Call of Duty. Modern Warfare added more players outside of the launch quarter of to the premium Call of Duty experience than ever before, with the majority of coming through upgrades from Warzone. On PC, life-to-date consumption of Modern Warfare is more than double that of the prior title. Incredible. Good to see that. Call of Duty in-game, but the prior title was garbage. But Call of Duty in-game net bookings. Sorry, Black Ops 4 was not awful. I'm being rude. I'm sorry. More than doubled quarter over quarter, and we're around 5 times higher than a year ago. Call of Duty Mobile saw sequential growth in engagement and player investment, benefited from both shelter-in-place tailwinds and the team's ongoing work to further optimize gameplay, monthly seasonal content, and in-game economy. The game climbed at the top of the grossing charts in the U.S. app stores, with each of the 3 seasons in Q2 generating more net bookings per day than the prior. Good to see that. Blizzard, World of Warcraft reach and engagement once again increased sequentially. The Shadowlands expansion saw enthusiastic response from players, in its public testing, with pre-sales accelerating even further ahead of its release in the fourth quarter. From Hearthstone Ashes of Outland's perspective, the expansion launched alongside a new hero class as the expanded team continues to accelerate the pace of innovative content in the franchise. Overwatch engagement grew year over year as well. From King, they delivered strong increases in reach and engagement. Candy Crush franchise monthly active users grew by double-digit percentages year over year. Massive. Payer conversion grew year over year, and Candy Crush was once again the top-grossing franchise in the U.S. mobile app store. What a shocker! They always are. King announced they will be bringing Activision's beloved Crash franchise to the mobile platform with Crash Bandicoot on the Run. Sounds like Temple Run or something to me. So that's my perspective. And they give guidance, and then we take a look at the balance sheet, as we like to do with every company. Total current assets of $7.7 billion versus 6 months ago, $7.2 billion. Good to see there. Total assets of $20.2 versus $19.8 6 months ago. Growth in assets, but do we grow liabilities? Tell me no, baby. Liabilities, total current liabilities of 2.5 versus 2.9. We shrank the current liabilities, and total liabilities, we shrank the long-term ones too. 6.5 versus 7 billion. So overall, stockholder equity has risen to 13.6 billion versus 12.8 billion. So it is good to see that. It is good to see that growth, and it makes us happy. Share price, I think you can say, is a little pricey, right? A market cap of $66 billion for a company making annually $7 billion, according to their estimates, $7.6 billion. You could say it's a little expensive, right? Right around, 8 to 9 times that multiple. People can consider that expensive, and I get that. But another side may think the stock's pretty hype right now, right? This is a hype stock right now when we talk about the fact that gaming is just out of control right now, and the pandemic's not necessarily done, so could be more benefits to be had there. But overall, I'm enjoying my position. I'm not really adding more right now, but I'm enjoying it.